So there's news on Amar Raja. The stock's just turned green. Nalanda India has picked up stake. They've increased the stake from about 5% that they had earlier. They've increased that stake to 7% plus. That is, I think, the disclosure to exchanges, which I guess would have been posted. And the stock is turning around on that particular information. Nalanda, of course, is one of the marquee large Indian private equity entities. And there is a big increase which has been reported now from them. I mean, remember all these incremental changes, who bought, etc. I mean, all of that for the quarter is starting to get reported, and it will continue through the course of this month. And the first one of meaningful size is coming in for Amar Raja. It's moved up a little bit more. I mean, almost a full 1% higher now, 742. Mr. S.P. Tulsian, Anand Tandon are still with us. Mr. Tulsian, do you track this one, Amar Raja?
Yes, Prashant, I do track, and you are right that, by 20th January, we will be getting this shareholding pattern, uploaded by all the companies, and there you see these changes. But if I just take the call on two companies, that is Amar Raja and Exide, I think the raw material cost goes in favor of them because the lead prices have seemed to have corrected, and maybe now rupee having, have strengthened, maybe from 72, 73. That is seen because lead prices are always import parity prices, and that is seen giving them an advantage. And coming specifically on Amar Raja, they have always been enjoying the higher multiples or maybe higher valuation over Exide Industries, maybe because of the good strength, because of the new product launches in the two-wheeler segments and in the telecom segments and all sort of things. So it's giving them an advantage. But the only problem is that the stock is not seen to be breaking out maybe beyond a level of 760, 770, 700 seem to be support. 760, 770 seem to be a resistance. So take this range likely to continue till we see the Q3 numbers and management guidance thereon.
Okay, that's Amar Raja reacting well to that marquee name coming on board and increasing stake. Before we carry on any further, let's actually get some more trading ideas in. Sandeep Wagle is joining us now. Sandeep, good afternoon. It's turning out to be pretty interesting, volatile. The bias is positive today. What stocks on your radar?
Afternoon, Surbi. I have two buy calls. A buy in a United Breweries UBL, stop loss of 1396, target of 1440. And a buy in a Praj Industries, a little late. The move has already come in, but I still see the move continuing over the next few days. Stop loss of 126, target of 138.
Okay, all right, Sandeep, thanks very much. Any disclosures that you might want to make?
Well, I personally do not hold any positions in the stocks that I have discussed, but our clients may be holding positions in some of the calls.
Okay, all right. Thanks very much for that. Mr. Tulsian, before we let you go, actually, I wanted to sort of get your views on what Siddhartha Lal finally said. So before I ask you the question on Eicher, let's just hear out commentary. And this is really interesting commentary that's coming in from the top man at Eicher himself, given all the concerns surrounding the company. Our colleague Arif Sherwani caught up with Siddhartha Lal, and here's the outlook coming from the man.
Demand, of course, and the growth story is what it's all about. And to capitalize on that, we're doing basic stuff, right? Which is basically going back to understanding at the brand level, at the inquiry level, at the walk-in level, and at the conversion level, how we operate, and understanding different markets, different segments, different ideas, what's going on. And of course, basically what's happened is that after 8-10 years of phenomenal growth, 40+% compounded growth, which for us was, I mean, I wouldn't have predicted that 10 years ago. Obviously, at some level, what's happened is that some things have caught up, right? Which is a normal case for any company. And at Royal Enfield, what's happened is that I would say we're at the right juxtaposition right now. We're at a point where the first huge phase of growth has sort of petered out a bit. And when I say petered out a bit, of course, there's a bit of reaction because of December sales drop, which hasn't happened in decades for us, in a decade for us that we've actually gone down. But that's more transitory as far as I'm concerned, because really we're still on a premiumization trend at Royal Enfield, and that's what we're driving.
The perceived slowdown, as you say, like you could have made these numbers look better. But now what has happened, the investor or the market has perceived this to actually be a massive reduction, and that has taken a toll on the share price. So you've seen an erosion over the past year, significant erosion, in fact 25% if I'm correct. Like, are you seeing this as a new cycle in the business? Are you expecting this to be the new normal? Will growth stabilize at this point? Or are you going to hark now to the double-digit growth that you were seeing and as a result try to prop up the share price?
So we don't do anything. In fact, as you can see very clearly, our focus and eyes are not on the share price. That's an outcome of what happens, and that's not our worry. That's something on which we have to think about, but that's not what we're driving on a daily basis. It's fundamentals of the business which we're focused on. And for me, for the year, we still have maybe high single-digit growth for 2018-19, and in fact, the signals are that with a bit of correction behind us that we have, we're going to have, we're going to continue now on our growth journey. This is not the new normal of, let's say, negative growth, certainly not. But who knows? We're talking about the future, right? This is not something that I can predict with certainty. The only thing I can predict is where we are putting in our efforts and what are the signals we're getting. And those are all, by and large, in the right.
Okay, so that's his explanation. He's saying that super high growth that Eicher had, that yes is tapering after years, after over a decade. But the December performance, that's a blip. That's the word from Siddhartha Lal. Mr. Tulsian, Eicher Motors, would you buy the stock after this correction or not?
See, Surabhi, first if you read the statement of Siddharth, because the answer, you get from his statement itself that, the company has seen a growth of 40 to 50% over a decade, and that's the reason the kind of valuation being given by the market. Now, I don't think that this is just the problem of the December month. This is what I've said after seeing the sales number for December, because if you recall, maybe about 18 months back, they had the problem of the capacity constraint, which they've raised it to maybe about 85,000 vehicles per month, closer to about 9.5 lakh vehicles per annum. And the moment that capacity got operational about a year back, you have been seeing the degrowth in the sales. First quarter FY19 average sales was 75,000 vehicles. Second quarter average sales was 70,000 vehicles. Third quarter average sales was 65,000 vehicles. So the market on one hand was expecting that 40-50% growth is likely to continue. As against that, we are seeing the degrowth of maybe about 15%. So obviously, that kind of performance is not going to get tolerated. You cannot give that kind of valuations which was enjoyed by the company. And that's the reason the 32,000 rupees, which we have seen as a peak of 52-week high for the stock has corrected to 20,000. Now, I think that market will look to see this trend getting reversed, maybe 65,000 vehicles, because mind it that in the month of December, the sales was 58,000. And if you have the sales of sub 65,000 coming in the month of January, February, market is not going to reward the company, kindly or going forward, because these kind of rich valuations cannot be given to the company going forward. So yes, the things are looking to be optically looking to be attractive, but as a cautious investor, if you want to play for the near term, you may see the short term bounce, and I won't hesitate in buying maybe closer to about sub 20,000 or maybe 19,800 for maybe for a couple of months or maybe for a month or so, and would look for the January and February month sales performance and would take a call thereafter. But as of today, the stock still looks expensive, doesn't qualify for a buy at the current level as well.
Okay, Mr. Tulsian, thank you very much for coming on. As always, sir, appreciate your time here on the show, on the channel. Thanks indeed, Mr. S.P. Tulsian there. 27 points on the Nifty, 10,797 is where we are at. So if you thought that the market's going to keep going and, do something spectacular, at least so far it's not doing that. If anything, it's actually come off the recent, the highs of the day. We're still up, almost 60 points from the lows. I think we got to about 10,730 or something. We're about 10,800 nearly. So it's off the lows, but it's not really powering through higher with big gains or anything of that sort. Just a few names which look strong. ICICI, Sun, etc. we discussed in some detail. Oro Pharma is another one. It's up about 3.25%. Page Industries is coming up with decent gains, 4.5 higher. There is Union Bank, which is up 3.5. The Nifty PSU index PSU Bank index still remains the top gainer. There is Godrej Properties, which is coming up with about a 3% gain. HDIL, real estate so far, last couple of days has done decently okay. And there is, I mean, Monsanto's seen a big reversal. I think Monsanto did go up some 8-10%. It's just got about 3 or 4% left on it. There was some confusion with that Supreme Court order which came through. It was interpreted to be unambiguously positive, but I don't think that is the case now. TRF is up about 12%. And we've got, I mean, more PSU names, Syndicate Bank, etc., which are coming up with gains of 4-5% each. Let's, on that note, welcome in our Alpha Manager for the day. Ronak Onkar of Parag Parik Mutual Fund is joining in. Ronak, good afternoon. Thank you very much for your time. Prashant here. Ronak, to your mind,
hi, good afternoon.
What are the 2 or 3 big sort of dominating drivers right now for the market?
So for the market, we have had these long-range themes going on in our country. One is the consumer discretionary spend theme. Another theme is the financialization and privatization of banks. And all these themes are continuing, and these have been around for a long time. All we are seeing now is those themes being played out in various forms, where the form of private bank lending has been going up, and financialization has improved in the past couple of years. So I think more or less the same themes keep working out, and we do see exuberance in some areas like the consumer names, where valuations have still not corrected to some extent, which is comfortable to buy.
So, Ronak, in terms of the approach to things right now, because we are getting into a busy season. I mean, there'll be elections, there may be populism, and now the question is whether you are thinking of any portfolio tweaks for the next 5 to 6 months. And these might just be simple, tactical, temporary strategic changes. But do you have something in mind to play this whole political juggernaut?
Actually, no. So we have had a stable portfolio going on for a long time, and the businesses that we own, we believe they have a very long trajectory. And a political event here or some macro event there should not affect us or should not waver our conviction from owning these businesses if everything fundamentally looks good. So yeah, the election might have some interesting times for the market where we might see valuations going either up or down. But that should either give us an opportunity to buy something or just sit on our hands and wait for the right opportunity to buy.
Mm-hmm. Do you believe that we are on the cusp of some revival as far as capital expenditure, at least in some sectors, go? I mean, short cycle sectors?
It should happen because it's been a long time since we have not seen a really long trend of capital expansion in industries. So it's been anticipated for a long time, and we are seeing in some bits and pieces here and there with public spending or in some cases private spending. But it's not as secular a trend as we should have anticipated in the past. But it's there, it's happening. So we don't know how fast or how slow that trend can continue.
Because I'm looking at, I don't know if it's the latest, I don't think it's the latest portfolio, but this, would you get some exposure there, or would you play through the lenders?
We don't.
Yeah.
We are more or less invested in the private sector banks.
Correct.
And mostly because of the retail portfolio under CASA that they have. So we are not playing the corporate expansion theme because we are not seeing a clear trend there. On the other hand, even if you see a clear trend, it's not necessary that the first lenders will always benefit, because the trend, if it's not established, then you'll have problems in recovering that money in the future. So I think all those ideas are cyclical in nature. If you have a really long enough trend you can identify, then you can stick with that. Otherwise, there are other businesses we can buy at reasonable valuations which are not related to that trend, but have other trends working for them.
But you do have ICICI Bank and Axis in your top holdings, I believe. So,
Yes.
incrementally speaking, if you're saying from here on, would you be more comfortable deploying additional money in corporate-facing banks or in the standard, tried and tested private sector retail franchise?
So in the portfolio, ICICI and Axis Bank are a smaller holding as compared to HDFC Bank, which is our largest holding in private sector banks. So clearly we are thinking from the retail angle rather than the corporate angle. But we do believe that the other two banks, ICICI and Axis, have a retail franchise, if not as strong as HDFC, but very strong compared to other smaller private sector banks.
Now, The other interesting holding that you have, Bajaj Holdings, I mean, because I remember our discussion earlier, because the holding company was offering just better valuations than playing something like Bajaj Finance or maybe some of the other businesses. But now let me talk about different parts. I mean, on the two-wheeler side, there are questions about, growth and concerns about the volumes, etc. Whereas on the NBFC side, I mean, do you continue to be comfortable with the large names like a Bajaj Finance?
So the reason we have Bajaj Holdings and Maharashtra Scooters in the portfolio is to get exposure to the Bajaj Group companies, but via the holding company structure, where we can buy those same businesses for a discount. So in Bajaj Holding, it is more heavy towards Bajaj Auto, whereas in Maharashtra Scooters, it is heavily inclined towards Bajaj Finance. So in the past, we have tapered down the Maharashtra Scooters holding, sensing that NBFC valuations were going up. But on the other hand, we have added Bajaj Holdings, which is facing the auto business in a little bit more exposure, and we have scaled that up. So clearly, we are invested in Bajaj Auto as a theme, but at the same time, we also have Bajaj Finserv as another holding via the holding company.
That's really interesting. I mean, is that a call on this one business? I mean, Bajaj Auto as a theme, as a business. Or can I extend that call overall to the auto sector, that you're not in the die-hard pessimist camp? Because right now, people are writing obituaries of the auto sector, I mean, on a daily basis almost.
Right. So we have Bajaj Auto via Bajaj Holdings. We have Hero Motor Corp about a couple of % in the portfolio. And we are invested in the Maruti Suzuki Group via the Japanese parent, Suzuki Motor Corp. So clearly, we are invested in the auto theme as we speak. And I think if you are believing in the long-term consumer spending trend in the country, a minor blip here and there should be absorbed. I think people should focus on the longer trend. If the trend exists, then if you have the business available at a decent price, you should buy it.
Okay, there is some news at the bottom of the screen, and we should try and get a quick sort of phone interview with the management. Bharat Dynamics, it's been not around for that long in the market. It's won an order worth 760 crores from the Indian Army. The stock spiked about 9% higher, 305 odd on Bharat Dynamics at this point in time, 305 on the stock. So looking pretty solid at this point. Ronak, it's a pleasure. Thank you very much for joining us. Great to have you with us here on this edition of Closing Bell. Appreciate your time.